Welcome back to Primary Source China Investment. This week we're on show C5, and we're talking about trade and the global shift that's been happening with trade. It's not by divine providence that the US has to be the largest economy on the planet and China has to be the largest trading partner. Countries and companies have agency. Trade is the independent variable, and we're going to get into some of the reasons why. China didn't become the largest trading partner for just about every country on the planet overnight, and it doesn't have to remain that way. Recall that the Trump administration imposed tariffs on specific goods from a variety of countries, but China was the primary target. There were some Korean washing machines and things like that. The justification was that countries and companies were exploiting the global free trade agreements. And today, we're not going to debate whether that has merit or not. But since pulling out of the Trans-Pacific Partnership 3 days into his administration, things have changed rapidly. Indeed, the Biden administration has taken the proverbial ball and not only run with it, he's brought on a ton of other countries to join. So at the outset, I'm going to ask peng.guo, is it just more trade is better, or is better trade more beneficial?
That's a good question. So I think, firstly, the assumption, in my opinion, should be political is political, business is business. So international trade or international supply chain really based on the demand and the supply. So if you want to suddenly change it over the night and cause a huge loss and mess up, who takes the consequence? So that's nobody takes responsibility for the political guys, so they can make whatever decision they wanted. I think naturally with the current economy recessions, so we can see the global trade get a significant drop, and many countries get hurt.
You covered a lot there, peng.guo, and some of those things, delinking politics and trade, I think we're past all of that. Now we are in the environment where trade and politics are linked, and companies and countries are reacting. And I think this probably goes back to a little bit before COVID, but really COVID sent the global supply chain scrambling. And we're seeing companies reevaluate their manufacturing base. Look at the Chinese companies that are going to Monterrey, Mexico, trying to build their manufacturing base now in Mexico. Number of companies trying to leave China to do that. The trend is particularly remarkable in textiles and apparels. In the first 4 months of 2023, about 21% of textiles and apparels that the US imported were from China. That's down 4%, and that's half the total of 10 years ago. So that means the manufacturing base is leaving China to other smaller countries, and not one country can take the place of China, but added together.
I think most hot country is Mexico as well as the Vietnam, right? So
yeah, Vietnam.
They take a lot of the business from China, but one simple thing they cannot solve it: electricity. So any manufacturing, they need the electricity. Any activities needed. So those two countries, they cannot produce the cheap electricity. That means their cost will be much higher than China.
Yeah, and that doesn't change overnight. And that's a great point. I can remember when the Three Gorges Dam project in China was underway, and there was so much hand-wringing over the environmental disaster that will ensue. But you don't hear about that anymore. You just hear about all the electricity that it did produce. So that's a great point. And not one place is going to be able to take care of that. Not one country, not one location. But there are shifts. I mean, you look at furniture and toys, two other low-cost consumer products that Chinese factories have long dominated the global supply of. China's share of US imports plunged well below 50% in January to April, the first time they've fallen below that mark since 2001. And that's a combination of not just companies moving out of China to build products in other places, but also China wanting to move up the value chain. So all of these changes are taking place. That's why when we, at the outset of the show, we say trade is changing. And these are some of the derivative effects of that.
Sooner or later, I believe each country, they can build a new business or new factories really based on their capabilities. So whatever, they definitely will take the piece of pie they deserved in the market.
Yeah, that's what I was asking you at the beginning. Like, is it just more trade or is it better trade, right? Globalization has had an effect. There's no doubt about it. I mean, a lot of the politicians in America talk about the gutting of the manufacturing base. I mean, that's not necessarily all true, but there's definitely been a shift, outsourcing of manufacturing jobs, some would call low-wage jobs, but the reshoring or friendshoring, that's definitely happening. I mean, look at Korea. It's the first time in 2 decades that more trade has gone from Korea to the US than from Korea to China. That's a watershed event. And a lot of the people, a lot of the professionals in Korea are saying, the Center for Korean International Finance has said this Made in China 2025 is the reason for that. Korea doesn't want to trade partially finished goods to China. Korea wants to now finish those goods.
That's true. So because they have an option, they can do whatever they wanted if they can. But I think from business perspective, it's more like the exclude the emotional or desire. It's really based on the fact they have to make the choice.
It's also diversification and protection of IP, whatever the motivation. That's why I'm saying, countries and companies, they have agency, right? We talked about the splitting of the politics and the trade. I mean, we talked about Australia a lot, 18 months ago, and we covered that in depth on this show because China was linking trade to policy. In 2020, when Australia questioned the origins of COVID, for example, China implemented a ton of trade barriers on everything from timber and coal to lobsters and wine. So what happened? Well, fast forward 3 years, Australia is doing just fine. It just printed a 7% trade surplus, a record. So, we learned from Jurassic Park that nature finds a way. Well, maybe trade does as well.
Yeah, I think the Australia is really make the mistake because he can get the China a pie, and he can also get a pie from our other market.
Yeah, I don't think it's a choice to lose the pie. I think the Albanese's government, took a position, and that's what their position was, and the effect of that was this, haircut in trade. But over time, China's come back to Australia, and we'll leave you with this quote I'll put the quote up from Albanese. He said, "Look, we can cooperate where we can and disagree where we must."
The problem is just those companies pay the price or lose the pie for a couple of years.
Definitely, if you were a wine manufacturer.
Yeah, because of political conflicts. It doesn't make any sense to lose a couple of years, and then they have to go back and rebuild the market. And
correct, but if you're look at NVIDIA, look at the chip manufacturers right now, right? If you're a chip manufacturer, you're seeing this and you're saying, well, I have to readjust where my end user is. And just this week, the Netherlands announced new restrictions on chips to China. So the politics are going to play, and it's up to the business leaders to make those adjustments.
Yeah.
So, like we say, call it friendshoring or localization or political. The change is here and happening, and we're in year 7 of a trade war between the 2 largest economies. That means plenty of risks and plenty of opportunities for other countries and companies. So we'll be following it, and we'll leave you with show C5. Thanks.
Thank you.